Hi, Richard here. Friday morning, the 10th of September. This is a daily chart of the SPY. But what I want to do is go into just a bit of an overview on short-term trading. But we need to get in the helicopter and look at where we're at. And you can see here we've got a considerable spike high on the daily, which is to turn over to the first hour of the new day in 1 hour's time. So it's currently just after the open of the trading market at 10 a.m. and this has been non-confirmed by the Dow, so it's quite important because this is what we traded yesterday, and I'll come to the 4-hour chart, sorry, the 4-hour or 2-hour chart it is to show you in a minute. But it broke through this support line. We consider this as a complex correction because of the three-wave nature of it: down, up, down. So you can see there's three waves everywhere. This is a triangle, and indeed as we speak it's trading lower, and we'd expect some failure of this pattern in that it comes down and we break down to the downside. But I want to go to the short-term trading chart, and indeed that's the dollar. This is the chart that we traded and I put up on the website at marketforecaster.com.au. We had our entry signal in here, a couple of bars. It was about 6 hours before we actually got support. It said enter at 45.20 at best, and then look for a move up through to the first trading target of 45.98, and indeed an upper target would have been 46.40. It didn't make that. It hit this trend line and smacked it on the nose, turned around, and is currently trading down. So this is the first few minutes of the trade. It's not yet 10 minutes of the trading day. On the futures, we can see that this is likely to be a bit of support here. The question is, what will it do? Well, that will be entirely reliant on this evening's action. So I doubt whether it'll break through today during our own trading time, but we're likely to see a bit of activity here, bounce, and then later on this evening, particularly given this divergence. And let me point that out to you. It's important. 1st of September, trend line established, rising trend line. We traded that nicely, but look at the divergence that's happening, and this is very typical of wave 5s. We expect to see a weakness in wave 5. If we don't, then we look for a further bullishness in the pattern. It's not to say that these markets can't quickly jump up and take out the previous high, but certainly this is a good sign that this is a weaker market, and we're looking to reverse our view and trade to the downside. The way to do that in the Elliott wave system is simply to draw the trend line. That's the channel trend, the Elliott trend, and then as it breaks you look for a trade to the downside. This would be confirmed by a crossover in the MACD. So all good news so far, but I also wanted to show you this on the Australian dollar because it tells a story as well. And if I can get to the daily chart, which that is not, but this is, you can see this overlapping complex correction as it's come up to the top of 3, down to 4. We've now come up. This could be seen as complete. We could call that wave 5, but it really depends what happens with the broader market. In the event that there is bullishness and the Dow goes to new heights, we should see a retracement, a very sharp retracement here, which is tradable, and then support on this rising diagonal line, and then will that be taken out at 92.86 or indeed closer to 94, which is the previous high at in April this year, and then if so, it would track quickly up to the potential of 95.58, which would be our target too. It doesn't have to. If it breaks down convincingly, then we want to get on the short side and go with it. If we find support here and it breaks up, then we want to be on the long side there. So just looking at the shorter term chart for the Aussie dollar, it looks very much like the ASX 200, which it in fact is doing. Here it is pushing down, and there's the support that we would see in the short term, and then a breakthrough that would give us a short opportunity to trade it down to around the 90.40 mark. So the way we measure that is off this Fibonacci retracement, and I can put that on to show you. We go down to the start of the end of wave, the beginning of wave 3 here, end of wave 3. that's the end of wave 1 up there, down for 2, and then we've got this 5-wave pattern up here to complete. And the targets would be set around 61.8. That's what the currencies generally like to retrace back to, or around the origin of wave 4 there. So down, support, up, breakthrough, short opportunity, trade it down into the 50 mark, and I suspect it could hit about 90.40 before we get on this support and look for support before we might get some bullish activity again. Let me just shrink that up a bit so you can see it if I can. Yes, this is on the daily chart. That's the rising support line here. So look, quite possibly you can see by the time that time takes out that sort of 90.40 or that 90.20 mark could be very realistic in terms of the correction before we get an indication of support. So that would be an extremely nice trade on the Aussie dollar. Alright, that's it on the short term. I can come up with some daily charts on the medium term trading in the industry sectors. I'll do that by early next week. In the meantime, for any detailed observation of these charts, the activity or commentary, please go to marketforecaster.com.au.